Hi there, welcome to Neppy Invests. I am Neppy and I love to invest, and particularly in equities or stocks that are breaking out. And today I'll give you two companies on the ASX that are looking like they might be breaking out. One definitely looks like it's breaking out, and the other one remains to be seen. Now, for full disclosure purposes, I actually do own both these companies. But it's always a good thing when you own a company and the share price starts to break out. So let's get stuck into it. Now, to understand why I get excited by breakouts, I think you probably have to understand my investing philosophy or strategy. So what do I look for when I decide to buy a company? Well, I'm looking for two things. So I'm looking for a breakout in the share price. It's very important. And typically the catalyst behind the breakout, what I like to see is a very positive announcement, in particular profit or earnings upgrades. You don't always get those sort of things, but other positive announcements can lead to share price breaking out. The other thing I also look for is shifts in sentiment. So I look at the charts, the share price chart of companies. I'm looking for technical signs like higher high, higher lows, and developing uptrends, that sort of thing. Now, when you can also get to both of these combining together at the same time, you can get a stock price breaking out, accompanied by positive announcement and a shift in the sentiment at the exactly same time. When all those come together, that is a very, very powerful buy signal. So the first company today I'll be looking at is Pushpay. I only actually bought this 2 trading days ago, and the share price did come back a little bit from when I bought it. So I actually did think at the time when I bought it, it may have been too much of an impulse buy. I did see the share price drop. I thought there was a developing uptrend at play here, so I thought I'd buy without any confirmation of a breakout, and there was no positive announcement or anything like that. They're haven't released the half yearly, because I think that's been released, or the yearly, it's released in May, so they have a different reporting schedule than a lot of ASX companies. So today they announced that they welcome Sixth Street as a new cornerstone investor. Now, I was very interested to see how the market would respond to this, because they could have considered this, a very positive announcement, because Sixth Street is a fairly highly renowned global investment firm, even though they've only been in existence for about 12 years. And the other reason why, the alternative was the investing community could have thought this bad news, because the shares were being transferred from the founders, Peter and Chris, whatever the last name is pronounced, to Sixth Street. Now, the original founders, Peter resigned, I believe, if I remember correctly, last November. He was a director, he resigned, and they sold out a lot of shares, but they still have 15% as a holding. And it's not always a good sign to see the founders completely sell out of a company that they founded. So I thought there was that potential. The market could have considered this as bad news. So I was very interested to see how the company or the market would react to this announcement. And you can just see Sixth Street there. Their investments include Spotify and Airbnbs. But just because they invest in those sort of companies doesn't mean their investment in Pushpay will be a success. So the first 20 or 30 minutes of trading, that's the only time I stick around at the start of the trading day. Share price was up something like 2 or 3%, and then I went did my own thing during the rest of the day, came back after closing, and I decided the first thing I did when I came in to see what happened during the day on the stock market was to look at the Pushpay price, and lo and behold, it was up 12%, which was a bit of a surprise for me. So the market has spoken. They liked this announcement. Onto the chart for Pushpay, and this is a company that I've been following for a very long time. I've never took a position within Pushpay, and I've always been waiting for the good time and price to buy in. I've never found that until 2 trading days ago. So I do believe that there's always a time and a price to buy into a company you like. Not all advisors would suggest that. They say if you do like a company, just buy in regardless of the price. So I sort of disagree with that. I think you can time it quite well if you know what you're doing. Now let's go back to September, October last year. The share price of Pushpay got to $2.20, and it was looking quite positive. I think the share price was in an uptrend until that time, but something happened on the 4th of November, which was quite detrimental to the share price. And that was the release of their report, their financial report. Can't remember if it was yearly or half yearly. Now, I remember reading this report and thinking it was actually quite good, but the market completely disagreed with me. And in these sort of circumstances, I will listen to the market, even if it's different than what I think, because the market is much more powerful than I am in moving the share price. So when I see the share price go down quite significantly in the release of a half yearly or yearly report, I will listen, particularly if it's accompanied by fairly large volume. So this was a really powerful sell signal. Now, what happens after the share price does this sort of share price action, after the share price does get to a price of like $2.20, there will be people, investors coming into the market saying, because of recency bias, thinking, well, the share price is 30 cents cheaper than it was a few days ago. This is cheap, this is good value. So they will buy in, and that's why sometimes you'll see a little bit of a bounce when you get the share price decreasing like this on a negative announcement. And that's exactly what we saw with Pushpay. Share price jumped to $2 on okay volume, and that was the time to get out. And I have no doubt there were a lot of fund managers getting out at that point because they had a sell signal just like we all had. And then from then on, the share price started going down, and we definitely saw a downtrend developing. And there's the downtrend. Now, the downtrend continued, and the share price got to $1.40. Now, $1.40 was a very significant level because that was the long-term support level. And as soon as the share price got to that towards the middle or late January, we did see the share price bounce on good volume. And that could have been the first buy signal you had. So in hindsight, that was probably the first buy signal we had. And then the downtrend was broken about 2 weeks later. You can see the downtrend line there, and a candlestick went straight through the downtrend. And that was the downtrend coming to a completion. So what do we have then? Well, we had a new uptrend develop. And the uptrend was developing just by connecting two of the lows here. The low at $1.40 and then the low at about $1.55 towards the end of February. And what happened one trading day ago on the 22nd of March, the share price tested that uptrend. You can see it testing it there. It's around $1.65 or so, and it's bounced off it quite powerfully. So this uptrend is intact. It's been tested at least once, and I think that's fairly bullish, powerful signal. The share price today up 12% on good volume. It's gone through a couple of resistance levels. There was a resistance level at about $1.70. It went through it about a week ago. It came back through it to test the uptrend. Now, the one thing that I'm a little bit wary about, and you always have to be wary about when you see these new uptrends developing, is resistance areas. And we have a fairly good resistance area from investors who bought back in November and December of last year. So what's the psychology behind this? It's all to do with these investors who bought in at those higher prices in November, December, saw the share price fall in Pushpay, and they develop a mindset, because the share price is dropping, that this is a dog stock, and they make some sort of agreement with themselves that when the share price gets back up to where they bought in, they will sell this dog stock. It's an extraordinary bit of human psychology that I didn't really believe in until I noticed or heard two of my colleagues say the exact same thing within a few months of each other. They both said the same thing. They said, I bought this company, the share price is now down, and as soon as the share price gets to the point I bought in, I'm going to sell. And I just said to them, but if it gets back up to the share price you bought in, that means the share price is turning around. And they just don't realize, they don't understand that. They think, oh, no, this is a dog stock, it's going to go lower. And they aren't willing to see the share price is now in an uptrend. And that's what we got to get through. There's a lot of resistance between $1.65 and $1.90. We are pushing through that, or Pushpay's share price is pushing through that. And hopefully, all those shareholders who bought in November and December, who now think this is a dog stock, have sold out. They've turned over their shares to someone new, someone who can see that the share price in Pushpay is in an uptrend. And we've still got to get through a lot of buyers who bought in around October last year when the share price was between $2 and $2.20. But some of those might have already sold out at a loss. So potentially a lot of those old shareholders are now gone. So hopefully that's what's happening. And what these resistance areas will do is put a bit of a suppression under the share price increasing. And that actually can be a good thing, because I do like to see the share price increasing at a slower rate. I don't like to see exponential growth in the share price, because that will bring in day traders. I don't want to see day traders, and that will bring in the speculators, that sort of thing. So I'd rather see the share price increase at a good, healthy rate. Now on to the second company, Spectur. This is a much smaller company than Pushpay. The market cap of Spectur is less than $10 million. Now, the reason I bought into this company is I do think they are cheap if they become operational cash flow positive. They almost reached that point a few times in the past. And if they do get to that point, that inflection point, the share price could do anything. Now, they released a positive announcement sometime today. I wasn't even aware of this announcement until well after the close of business. So this positive announcement is in regards to revenue. So I do like a financial aspect to any positive announcement. We didn't see that with Pushpay. That was just, a new, cornerstone investor. But this was in regards to record February revenue, and they signed a major contract with a surf living saving organisation. So the February revenue was only $471,000. So you might think that's not a lot. But in regards to this business, that is fairly good numbers. And of course, that's a record, so it has to be fairly good. Their typical quarterly receipts is around 1 million to 1.5. I believe their record quarterly receipts is 1.5 million. So they're on the way to exceeding that, particularly if the March quarterly receipts is higher than this, say it's 500,000 or something. The contract they signed with the surf living organisation was with Surf Life Saving Western Australia. It's in regards to the surf alert modules, which is a beat protection system, say storm monitoring, that sort of, it's not storm monitoring, shark monitoring or alerting. And the value of that contract is $250,000, which doesn't seem a lot, but for this company, that is a fair chunk. And how did the market respond? Well, share price up 18.4%. So the market did like this, but I've seen this before with this company. They release this sort of positive announcement. The market loves it, and it can't be sustained, that positiveness, during the medium term, because eventually they'll release something, the quarterly cash flow report, and it disappoints and the market sells off. Now to the chart of Spectur, and you can see way back in, this is a 6-month chart, just like Pushpay, and way back in October last year, there was a lot of negativity around Spectur. Share price got down to 5 cents. Not a lot was happening. I did buy in before this, but then on sometime in November, I forget exactly when, they did release a fairly positive announcement, fairly similar to the one they released today on the 23rd of March. I should say what date it is, because there's probably people watching this video who aren't watching this on the 23rd of March. Anyway, so this positive announcement released on sometime in November was accompanied by some fairly large volume. So I consider this to be breakout number one, because the share price increase was accompanied by that very large volume. That's exactly what you want to see for a breakout. The only negative thing here is the candlestick did have a fairly high tail, which probably suggested there was a fair bit of selling of some people who bought in at higher prices well in the past. They saw the opportunity to sell out because the share price had reached like 9, almost 10 cents. The next few days there was a little bit of selling, but not a lot, and that's exactly what we want to see. And then we saw the share price get towards 10 cents. It actually hit 10 cents. And 10 cents is one of the most powerful resistance levels for a company to push through. It's just a natural barrier for the share price. And that was a higher high, that 10 cents. And then we saw a higher low about a week later. And that's very powerful. That's exactly what we want to see, higher highs and higher lows. And then in the start of January, we had a potential another higher high, but it failed. It didn't get above 10 cents. What we wanted to see with the next high was it get above 10 cents and hopefully stay above that. But that next high completely failed. And in fact, we did see another low at the start of February, which was a lower low than the previous low. So that potential uptrend failed. With the uptrend failing, we, the shareholders, were in a bit of a holding pattern, patiently waiting for the release of a positive announcement from the company to push the share price higher. I was thinking the most likely time for that positive announcement would have been the Appendix 4 they released sometime in April, more than likely towards the middle or late in that month. And we just had to wait for that. But lo and behold, we had that announcement released on the 23rd of March. Anyway, so this candlestick today on the 23rd of March was very similar to breakout number 1. So is this breakout number 2? It was just like number 1 breakout, where it was accompanied by fairly large volume. Not quite as large volume as we saw with that breakout back in November, but still much larger volume than what we've been seeing in the last few months. Now, a couple of negative things about this potential breakout. Just like we saw with breakout number 1, once the share price got above 9 cents, there was a fair bit of selling, a little bit of selling that came in the market. And the most likely reason we saw that selling was because we have to churn through all those shareholders who bought back in late November and December. So they bought in around 9.5 cents. They saw the share price rising. They saw, oh, this is a stock company in the uptrend, I'll buy now. And then the share price failed that uptrend and the share price moved lower. Got as low as about 6.3 cents or so. And so they now thought this company was a dog stock. And as soon as the share price gets back to where I bought in at 9.5 cents, I'm going to sell. And that's what happened today. And so we have to churn through all those sort of shareholders who are putting a lid under the increase in Spectur's share price. It's not a bad thing to have a bit of a churn with those shareholders. What would be very bullish for me if the share price can get above 10 cents and remain above 10 cents. I've mentioned a lot of times, a lot of my videos, that 10 cents is a very powerful resistance level for any company's share price to push through. It might take a while, might take a bit of time, but if it can get above 10 cents, that will be very bullish. So I look forward to that, and hopefully it can push through 10 cents with a high, low sort of setup, which would confirm an uptrend, and hopefully the uptrend can continue for many, many years. Hopefully they'll release a very positive Appendix 4C, a cash flow positive Appendix 4C, and hope that's the first of many to come. And as a shareholder, that's what I'm hoping. But sometimes you can't hope, you just got to play what happens in front of you. So that's all I've got on this, on 2 ASX stocks that are breaking out. Hope you've enjoyed this video on Pushpay and Spectur. If you do have any comments, leave in the comment section. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all. Have a good day. See you later. Bye.